What's up, everybody? Welcome to another edition of Zach's Live Trader. Here with you as always, I am the Bearded Boy Wonder, aka something that I put on my LinkedIn profile. See how you guys like this? The People's Champion of Wall Street. I like that. It's got a nice little ring to it, doesn't it? Very WWE, of course. But that's okay. The Rock did just fine. You know, I'm basically stealing The Rock's thing, right? But that's okay. That's fine by me. I like it. The People's Champion of Wall Street. Or like Main Street's ambassador to Wall Street. Whatever. I'm going to figure it out. It's a working title, okay? I'm working on things, right? I got these ideas. We'll see. See you guys starting to trickle in here. Thanks for coming out. You know, honestly, 1 o'clock snuck up on me. Not because, you know, I was doing something else. But as I'm sitting at this desk, I had everything up. I got distracted with a couple of emails, and then I looked down and I went, oh my God! Oh, I gotta go. Look at that, Wild Bill Phillips. What's up, guys? What's up, everybody? Now, there's been a few changes. I don't know if you guys know about this, but we've, you know, Reitmeister has left Zach's, or at least our side, Zach's.com. He's over at Zach's Investment Management now. And so Matrix is running the show, which is great. Matrix is an options guy. I learned a lot from him. Continue to learn a lot from him. Interestingly enough, when I first started doing Bloomberg, I would go into Matrix's office and, you know, kind of bounce these things off him, make sure I wouldn't sound like an idiot when I went on TV for the first few times. And he was a great help in, you know, setting the expectation of what I was about to see and getting my mind right. So that was good from him. But he's an options guy. So what we're doing here is, obviously we've made Live Trader free for everybody. A little bit of a PSA before I get started, okay? First, you guys know, join us in the chat room. Come in on Discord. I know all of you guys are, so I'm preaching to the choir here. But join us in the Discord classroom. Now, it runs across as discord.gg. You know, there's a P, there's a BWC, there's all sorts of letters there. But that's what you need to put in. Get in on our Discord, because it's a chat room we've got open all the time, so we talk all sorts of madness in there. Sometimes we get some good trade ideas. Sometimes, you know, we're just, you know, pretty much I'm the guy who puts everything. YouTube blocked you. Bill, what you got to do, and everybody's got to do, make sure you, like, if you were subscribed to the premium stuff, the paid subscription, cancel the paid subscription, and then log in under the free. I think a lot of people have been doing it. Well, I can tell you we've got a lot of growth here the last couple weeks after making it free, so that's cool. So hopefully you can figure that out. So there's that and that. Yeah, the link, right? Okay, so I sent that out. We got that done. And for, like I said, there's a lot of newbies here. I don't mean that in a bad way. I just mean you guys, you know, are new to the channel. For those of you new to the channel, you got to send me an email, livetrader@zax.com, in order to be on the distribution list so you guys know when I'm doing these, okay? Otherwise, you do get the YouTube notification, but I'm going to put this right in here, livetrader@zax.com. Shoot me the email. Make sure you get on my distribution list. Get on my distribution list so you know when these are coming out. livetrader@zax.com. So there's my PSA. And boy, we were rocking with the 80s today, huh? Holy smokes. Yeah, cool stuff coming. I feel like I got to hang out with you guys for a little bit here before, you know, on these, when these first sort of the week things, so we get cracking. What else? Guys, I'm moving. No more Sunny Isles Beach. No more ocean view. It's a little upsetting. Actually, it's a lot of upsetting. But it's okay. I need to find a nice little oceanside town that's not as crowded as is here, man. It's just there's too much going on here. I don't like it. It's too crowded, man. Like people on top of people on top of people. Lots of noise. I need a little bit of quiet, man. I'm trading here. I need some peace and quiet. I also need a garage. I like to wrench. I haven't wrenched since I've been down here. I need to enjoy myself from an automotive perspective too. So we're moving. The lady got a new gig. It's gonna be fantastic. I don't want to. She's working on a new gig. Let's put it that way. Let's go from there. For a second there, I was like, oh my goodness, wait. What if like people don't know yet, and then it's okay, no one knows her name. G14 classified, so it's okay. You know, like what if I just spilled the beans? Oh my goodness, that would be terrible. It's okay anyway. She's gonna be fine. Anyway, so we're going out to Sunrise, I believe, is where we're gonna be. So if anybody, the dog just scared the bejesus out of me. By the way, I had my feet under the desk, and then all of a sudden I felt some cold little nose on my foot that scared the bejesus out of me. Okay, so let me address this first before we talk about Constellation brands. That's what we're going to talk about today. Of course, I want to talk euro. I got to touch on this a little bit because I have been short the euro. Okay, now unlike my yen short, I was smart enough this time to go out to October 20th, so I've got a little bit of time. In my short, I'm using FXE as proxy for the euro and the dollar, right? But it's the same thing. I want it to go down, right? I want FXE to go down. Down. See, even being welcome to the jungle, they're rooting me on going down. I think this kind of stuff is happening. A little bit of a sell-off. What I'm worried about is support here. That's awful close. I don't think that's going to provide support, though. I think we're going to run out of steam. What I don't like that we ticked down and then now we've got a reversal up today. I don't like that at all. But we didn't get close to taking over yesterday's high, which is good. And it's stalling out. And if you zoomed in a little bit and went on the half-hour chart, you'll see here kind of what I'm talking about. So this thing stalls out 10:30. You guys know what that is? That's the European close. So at the European close, it starts to sell off. We'll see what happens throughout the course of the day today. We're almost done trading. I mean, the euro, it's rare that you get a big move in the late afternoon. But I'm hoping, see, Asian session last night sold, and then into Europe is when they picked it up. Now that Europe's done, hopefully let's smack this thing back down because you got all sorts of unrest happening in Spain right now. Looks like Barcelona's going to have to find another La Liga to play in, and we'll see what happens. But either way, I think we're still in a downtrend here on the euro, and yeah, I've had FXE. Let's look at this is how I've been playing it. I have a 113, 112 put spread, so close. I'm close. I'm in the money on it now. I mean, wait, let me clarify this. I'm making money on the spread. Okay, so my personal trade is in the green, but I'd love to see this 113 area. Of course, that would be a break of the August lows. I'm expecting that to happen for sure. So we just need one more little crack of that branch, and I will be sitting pretty. So there's that. So another quick thing I want to touch on with you guys. Adobe starting to creep back up. Yesterday got back up to 150. I know that was the bottom end of our put spread, our short put spread. So saying there's a chance. And then KB Homes, these guys are just running. I mean, wowzers. So a little bit of time on this one too. So this was a strangle where we're at the money. You can cover the put spread and hope that the call spread comes back down. That's pretty much what we're going to talk about on Thursday in the good, the bad, and the ugly. But again, I don't want to harp on this. Just want to touch on it real briefly, okay? Let's get to the task at hand, which is Constellation Brands, ticker STZ. Now, as always, we're going to start with the price consensus and EPS surprise chart here on Zacks.com. Black line corresponds to the right y-axis, which is price. Green arrows, earnings beats. Red arrows, earnings misses, just a couple of them. And the multicolored lines represent the evolution of our Zacks consensus estimates over time and correspond to the left y-axis. Now, what's jumping off of the page right now is just the glorious trajectory of this earnings. I mean, this is beautiful and a textbook example of why Zacks works. What we're trying to do here overall at Zacks is we're using these EPS estimates to give us insights as to which stocks are likely to go up, right? So we track these guys, and we've got this magic formula. All the numbers go in, and then we give sort of a likelihood. It breaks it off into a nice distribution of strong buys, holds, sells, and strong sells. And what we've noticed is we're trying to find a way to quantify this stuff that happens, right? These up and away sort of earnings scenarios. Now, you don't need to really quantify it when you find it. So here we've already found it. And when you find a chart like this, this is exactly what you should be looking for in a long-term stock that you'd like to hold. Now, I know doing these little earnings previews, we're trying to come up with shorter-term trade ideas. It's sort of the gimmicky part. It's the fun part, right? It's the sexy thing that people want to talk about. The chance to get a double up or a triple up or more on an earnings report. It's fun stuff. But overall, when you stumble across a stock like this, you have to like what you see. And you have to think to yourself, if you do have exposure to something like this in your portfolio. And if so, if not, why not? Maybe because it's a little overbought. That's what you might be thinking. But when you put it in this perspective, when you start to look over the years, what's happened, these EPS estimates going up over time, and then the growth there consistently, growth and ticking up, it only implies that in the future you're going to have the same thing, which should be beneficial for the stock price. So overall, on this price consensus and EPS surprise chart, this is glorious. It's beautiful. It's exactly what you want to see in a stock chart. Now, they are a Zacks rank number 2 buy right now in an industry that we have in the top 6% of our Zacks industry rank. They're reporting before the market opens on Thursday. So you got the rest of the day today, you got all of tomorrow to decide if you want to make a move on this thing. Now, I've gotten a few emails from guys wondering, hey, Dave, why don't we start this a little bit earlier? And what I mean by that is, why don't we look at a stock that's, you know, a couple of weeks out and see if we can't play the run-up into the earnings report? And that's a fantastic suggestion, and that's what I think something I'm going to end up doing. So we're going to start adding that wrinkle in here to the shows that we do, okay? So I think maybe one a week will be something that's far out, right? Does that make sense? I think that makes sense. And then the couple of them will be closer in. So you're gonna start seeing some of that here. Always open to suggestions, right? Now let's look at these revenue estimates. 1.8% revenue growth for the current quarter. Next quarter looks like 3%. No, we haven't started that yet, really. No, but I'm going to. Well, I mean, I will. So just tell me. Shoot me the email. Tell me what you want to hear. And that's what I'll do, okay? If you guys have an idea that's a week out, 2 weeks out, I'll do it. Because I'm open. I'm looking for stuff to do, okay? Current year looks like, yeah, of course. Yeah, lots of people would rather do that. So we'll start doing stuff like that. And then if you still want to play the earnings, you can play the earnings too. We can do little follow-ups, stuff like that. Tons of fun. We've got all sorts of stuff we can do. All right, so back to these current year revenue numbers. 3.8 current year, 7.18 for next year. So revenue increasing next year is going to be really nice. You know, what's that about? Well, there's some headwinds, I guess, that these guys were facing. Look at the EPS. Current quarter EPS, 22% almost EPS growth. Next quarter, nothing. Kind of strange, right, to see that? Current year, 20.65. Next year, 12. So it's interesting to see that number kind of do what that number's doing. Let's look at these estimates recently. So just over the last 60 days, look at, you got 7 analysts increasing current year numbers, 6 doing so for next year. But if you look at this quarter, you got 5 of them. You know, this was all a while ago, 60 days ago. 5 of them dropping their numbers for the current quarter, 5 for next quarter. So there have been some changes here. Why the reason for the number 2, though, Zach's rank, is because the more recent moves have been to the upside here. But again, guys, like we were looking at the price consensus EPS surprise chart, that tells us that things are going good over here. If you look at the overall effect to the Zach's consensus, it's nothing. I mean, this thing's been stagnant. Doesn't matter where you look. Well, I guess there is. Okay, so I did find a move. 2 cents for the current year. That's not much. And then nothing. So there hasn't been a lot of movement, but we don't necessarily need it. And when you look at the surprise history, big surprise last quarter. Big beat. Several beats in a row. The last 4 averaged 21 cents, were a 11.7% surprise. So people have been pleasantly surprised. Now, in my usual work for this, what I do is I go ahead and dig through and take a look at a few analyst reports. What I found here is that analysts think that so Mexican import sales, so good old Corona and Tecate, do they do Tecate? Oh, actually, I probably shouldn't have said that without knowing. I think they do Tecate. We'll find out. I know for sure they do Corona, okay? I've read enough Corona bottles in my day. So Corona sales are up pretty good. They were expecting heading into this year a 1% contraction in Corona sales in the U.S. There's actually been a 10% growth or expansion of Corona sales in the U.S. this year. Okay. You know what? I'm going to blame, well, not Corona, Mexican beers overall. Okay, so let me just clarify that. Look what happened last quarter. Big jump, hasn't looked back. That's spectacular. Big jump, hasn't looked back. And now this move had a little bit of a retrace. This could be shaping something up for us here. There's a move. Retrace under the, almost to the 61.8. All right, so that didn't tell me as much as I thought it was going to. But if you notice, guys, 50-day moving average. It's so funny. I get in arguments with people all the time. Well, not so much anymore, but I used to. Like, these numbers don't mean anything. Technical analysis is a bunch of, hullabaloo. And I understand, I guess because I know so much about technical analysis, there are certain parts of it that are, just voodoo and just silliness. And then there are other parts of it that are mathematics. And I don't think that you can argue with the mathematics. And it frustrates me when people try and do that. Like, if I'm going complex and I'm looking at, I don't know. I don't want to pick on anything, but just insert your favorite thing. Even my commodity channel index that I like to use, right? I use it as an overbought, oversold indicator. Other people use it as, the gospel. And then people make fun of them because they make it the gospel. And that's fine. You can make fun of that. But, like, moving averages, don't make fun of moving averages. Like, this happens all the time. And it tells you what people think about things. So they don't own Tecate. See, I'm out here throwing out beers, and I didn't really know who owned what. Anyway, let's look at this. I gotta stay on task because I've been bouncing all over the place today. 50-day moving average. You can see how in a bullish market it provides plenty of upside support, and in a bearish market it'll slap you down a little bit. So look at what happened here. Into 2016, sometime under that average, struggles, finally rallies above it, flirts with it, disastrous. This wasn't so good. End of last year was kind of terrible for these guys. Blast down below it. The 200-day doesn't even provide support. I talked about this in my write-up the other day. If a stock or an index or a commodity or whatever, any financial instrument on earth, dips below its 200-day, there should be a compelling reason why it's down there, okay? Why is this down here? Now, anybody venture a guess here? I've got a few guesses. Oh, I keep forgetting there's like a delay here. I don't know if I want to wait the 30 seconds for everybody to guess. I'll just give it away. November should give it away. You guys remember? Remember? November? Constellation Brands. They make a few bucks importing into the U.S., don't they? And they make a few bucks importing Corona into the U.S. Early on, after the Trump election, everybody was worried that we were going to have these, going to get out of NAFTA, there are going to be a bunch of protective tariffs, and all this sort of stuff was going to happen. Really thought that was going to put pressure here on Constellation Brands. So a lot of this move, this initial move up, this gap up, a lot of this, these are the butterflies leaving there, okay? So butterflies, consider the butterflies gone in about May, okay? So you can just kind of just chalk this all up to butterflies and just throw this out. So the real reason why this was trading underneath the 200-day was there was a risk that these guys were going to wake up one day and their Corona bottles that they were importing for, you know, whatever. I don't know how much it cost them. $1 was going to cost them $3, right? This is what they were worried about. So those butterflies are gone. And then now you can get back to looking at that price consensus EPS surprise chart and going, wow, no, these guys really do deserve to be higher. That's why you get a retrace to the 50-day, met with a buy, retest again, boom, then you get earnings, gap up. Now we're on the 50-day again, okay? So this is a little nerve-wracking, okay? A little nerve-wracking. Where you have, I don't know, my highlighter. You have the stock now here at the 50-day after a huge run-up. And I'm pretty sure just by eyeballing this, guys, if I was looking at the MACD, that MACD is starting to roll over. You guys know about my buddy MACD, right? That's the moving average convergence divergence indicator, okay? So what it does is it takes a couple of moving averages, and then as the distance between them becomes greater, it starts to go up. And then when the distance between them starts to come down, that's when that MACD starts to roll over. So that, my friends, is a problem, because what's happening is the pace of growth is slowing. So people you get a little worried when you start to see that kind of thing, right? Is it running out of steam? But this is going to be a popular theme here, I think, in a lot of stocks that we're going to see over the course of this quarter. Like, they've gone so high, are they running out of steam? Now, be careful of letting yourself get sold into that argument that it's come so far, what's going to happen? Like, it's going to come down, right? You got to get your head out of that. It's a natural reaction to look at these stocks and think, oh my gosh, they're up so much. But you can't think that way, because the earnings are there too, okay? And the revenues are there here on Constellation Brands. Let's get to the revenues. The aforementioned revenues. Got to crank the Metallica up a little bit. I can't hear it. I left the speaker way behind me. I have an awesome speaker set, by the way. Klipsch, like computer speakers with the sub and the speakers. Still in Chicago. I really need that in my life. I need to bring those bad boys here. Okay. Look at these revenues. This is KB Homes. I don't want to look at KB Homes. Get this back. All right, here we go. What kind of time frame? 5 years? Let's look at 10 years. Heck, who cares? All right, 10 years of Constellation Brands. Let's see what's happening here. It's like something happened in 2013 when everything got good. Look at 2014. Look at these numbers. They're just huge. 2016 number slowing to 8.63%, but accelerating again here in 2017, 11.96%. And then next year, not quite sure are we having that all filled out, but whatever. So nice solid revenue growth. And further than just the revenue growth, it's translating over to the EPS side of things. I got the Klipsch open box special. Why I love buying open box specials, this happens to me every time. I buy an open box special, I bring it home, it doesn't work, I come back with the open box and they give me a new one. Just cut to the chase and just give me the new one for the price of the open box. It happens every time I buy an open box. Like 3 or 4 times it's happened already. I just don't know why they just don't. Just cut to the chase, man. Like, come on. And they never care either when I do it. Okay. Back here. 8% last year, or 6.75% 2017. 2018 looks like 8.16. Then you get 9.14. Then you get 10.2. Accelerating EPS growth. This is great. Other thing I read is they said margins are actually going to be a lot better on beer than everybody expects. I know there's a way I could... Oh, no, I pressed the wrong button. It's the problem when you fire up these things. Totally wrong thing. Okay. Sorry, guys. What I wanted to do is pull a chart up. I know I can do this. I can chart... I could chart margins. Let's just do gross margin, shall we? Trailing 12 gross margins. This is great. This is a great chart, okay? Look at what's happening. And let me change this. I'm going to do the actual sub-industry, which is the alcohol beverages. So this is the real story of why Constellation Brands is something you want to look at. Jeff, you're absolutely right. That's the lick, man. That's what you do. So this is the gross margins for the alcoholic beverage market. You'll see spectacular margins that came crashing down. And it's still been very good from basically 2013 on into here, okay? Now, granted, this is gross margins for the overall market. So you're going to have, like, hard liquor likely has a better margin than the beer stuff does. But look at this. That their margins have continued to improve, getting closer to the industry average. All the while, their EPS estimates are pushing in the positive direction. Revenue is growing. So that's why. Margins are getting better. Revenue is going up. We've got a lot of good things going on over there at Constellation Brands, okay? Now, let's go to our consolidated surprise. And this is going to tell us how these guys have been behaving around their earnings reports. 5, 5, negative 5, 3, 2.64. Okay. What about before then? So 5's been the cap, guys. 2.74, 2, 3's. 5's been the cap. Going all the way back to, heck, you got a 6.3 in 2013. I mean, so don't expect anything spectacular. I guess technically they're in consumer staples, right? You need your beer. So don't expect anything too crazy out of these guys when we dig into this options chain. Oops, don't do that. I don't need to see that. Okay. Sometimes I click on the wrong thing. I got 2 screens up here, guys. Sometimes I click on the preview of my thing that's happening now. That's the last thing I need is me playing over the speakers back to me. No thanks. All right. So let's look at the options chain here. Do the side-by-side view. You mean the microbrews and such, Fernando? It hasn't been the microbrew craze has not been as negative for Constellation Brands as it has been on the Budweisers of the world. The reason being, this is already like, you know, they're imports, right? So they're already got a little level of fanciness to them, versus, you know, just that. I don't even know what you want to call it. What do we want to call? I mean, I know what I want to call it, but I can't say it here. What you'd call that watered down American lager of, you know, the Coors Light, the Miller Light, just that-ness. But overall, they're not as impacted by that whole thing as the American brewers. All right, let's look at the 200. Put 200 call. Let's go ahead and highlight this. Bust out the handy dandy calculator. 200 call is going for 570 by $6. We're gonna call that 585. At the money puts 660 by 720. That's a 690. 6.3%. That's what we're looking at here, guys. 6.3%. That's pretty standard. I mean, if you look, we saw that really the immediate reaction for the market is they're mostly on our consolidated surprise chart. They move about 5%. So given that there's another 2 weeks in this, that makes perfect sense, okay? Now, for those of us wanting to make a few bucks on this, a couple of ideas. The first is going to be actually selling an out of the money put spread. And the reason why, guys, near beer, that's a good one. I think you guys should seriously consider, if you got a few bucks in your account, I mean, this is probably a larger position. In your position, it depends. You know, I don't want to tell anybody what to do with their account, but this is one of those stocks. What do you mean I talk about? I tell everybody what to do with their account. I talk about stocks and what stocks people should own in general. Nothing is ever specific to your own situation because I don't know your situation, right? We're just talking about the actual stocks themselves and what they merit. I'd be perfectly comfortable selling a 190. And if the stock comes down there, then now I got this at $187 cost basis, okay? Perfectly comfortable with that. But let's put together something a little bit more scientific for us, okay? So what that's going to be is this 190, 185 put spread. Going short the 190, you're going to get 268. Simultaneously going long the 185 so that the stock doesn't get put to you, although, like I'm saying, you should consider having it put to you. It's 148. So 120 is the net credit on this one. Difference in the strike price is $5 minus that 120, that's $380. So you can make 31% on this trade, and all you need is shares of Constellation Brands to close at or above 190 at expiration. So this is a bull credit. Bull credit would be short the October 20th 190 put, 190 / 185 put spread for a 120 net credit, okay? And yeah, guys, I think this is a stock you can buy and forget about it. Because, like Jeff said, people love buying beer. And looking at that price consensus and EPS surprise chart, these guys have been doing great. Looking at their margins are improving. Everything looks good. It looks good, okay? And until it looks bad, there's no need to freak out, all right? So I think that's a nice bullish trade for this. Now, if you want to be bearish, you got to look at the chart here, right? So that was the 190. And I probably should have showed you guys this before. So if we're selling this 190 spread, you're basically saying, all right, man, if it gets into this post-earnings gap from last time, I'll take some of that, right? I'll buy here. So that's what you're saying by selling that put spread, okay? Now here's the hard part. So if you do want to be a bear, you got to say it comes down back to that level. The real bearish guys are going to say gaps get filled, right? And eventually that's got to get filled. I think this is more of an extreme bearish position, and this is a more reasonable bearish position. So the way to play that more reasonable bearish position aggressively would be going long this at the money put and selling those 190s, okay? And making money on this dip here if it does do that. So for you bears out there, I'm going to give it to you. So let's see what a bear can do. So if a bear were to buy the 200 and sell us that 190, so we're basically The bears are selling the bulls that 190. It's going to cost you $690 to buy the 200 put. You're going to get back 268. That's 422. Now the difference in the strike prices here ends up being $1,000 minus that 422. It's 578 you can make on 422, or 137%. Okay, so that's one way for these bears to come out here and make some money. It's more aggressive, more risk on the bear side. So I'm going to say the bear debit is long the October 200 190 put spread for where was I? 422. Now, I know you guys are wondering, well, Dave, if you're so bullish on this, why aren't we going vertical with this? Because it doesn't. The stock has a tendency to not really move all that much. 205 is the 52-week high, so it's kind of parked up here, relatively close to the 52-week high. It's come down to support at that 50-day moving average. I'm just more comfortable selling out of the money spreads in a situation like this than going vertical to the upside. Like I was saying, to the downside, the bears could be more aggressive because if they think this thing pops it, or if they think the thing breaks down, they should be rewarded for going out on a whim and, you know, trying to fight this thing despite all of the positive undertones that we are seeing in the margins. Now, what's the risk, though, guys? The real threat here is that these margins come out for beer this quarter, and they're not as good. So those improving margins are not happening, and that's a risk that you're going to have. And that would be a scenario where the bears actually won. I give that like a 33% chance of occurring right now. 66% chance that the margins continue to improve based on what I've read. Okay, so when you're gaming this out, that's what you should take into account. Okay, now if we're looking for any lotto tickets, you probably want to look somewhere else. Remember, when we're trading these $200 stocks, these are really expensive. So you don't want to get into a situation where you're rolling the dice with $300 per contract, right? Unless you're going to buy one, but what's the fun in that anyway? So I would pretty much avoid it at this point. Just too expensive to mess around with these $200 stocks. Any sort of lotto action, okay? All right, so there you have it, guys. That's what I got for you for Constellation Brands. In terms of risk, I would say that the bull credit short carries with it a we're going to give it 2 stars. That's how I'm going to make my stars, just because those are the easiest way to make stars. I can't even imagine trying to... Okay, so here's me trying to draw a star without that. That looks like a flattened starfish. That's terrible. One of these days, I'm going to get a nice, sweet little graphic that goes like 3 stars, and it goes across the screen and bloom, and does like a thing. Probably when we get over to Twitch and start messing around with that. That's right. We are going to get over to Twitch. I'm going to be all up in it. All up in it. No bull debit, Dave. No. Not comfortable with the bull debit on Constellation Brands. Just because it doesn't move that much. Or it hasn't moved that much. Now that I'm saying that, it'll probably go up 20%, right? But I'm not. I don't have one. Not comfortable with a bull debit here. But if you wanted to, don't go out too far. Remember, this all-time high is here at 205, right? So you can actually still make some bang for your buck, even if it just approaches the all-time highs. If you went long the 200, basically it's 585, 385. So it's going to cost you 200, but you can make 300. You make 150% on it, okay? If you did the 200, 205 call spread, and that happened, okay? So that's all I got, guys. I don't even know what this sub email... Jeff, we got to talk so much more about Twitch, bro, because I'm trying to, like, get there. I think I just got to watch it and figure out what's going on. There's all this new lingo that they have over there, and it's making me feel like an old man. And I'm not an old man, so anyway. All right, my friends, that's all I have for you here with Constellation Brands. Join me again tomorrow for whatever the heck we're talking about tomorrow. I can't even remember. What are we talking about tomorrow? What am I talking about tomorrow? I don't know. You guys already know. So, and then what else? And then we've got GBU on Thursday, Friday morning. We're gonna do the morning after. So we're gonna hang out. We're gonna see what. Oh, Costco. That's what it is. Costco's tomorrow. So on Friday morning, we're gonna see what happened at Costco. See if there's any actionable trade ideas we got following up on that, and we will go from there. So I want to thank everybody out here for hanging out with me. If you're not on my distribution list, shoot me those emails, livetrader@zax.com. Get on the list, and we'll go from there. So thanks so much for hanging out with me here, guys, on Zax Live Trader. I'll see you all mañana. Have a good one.